You're already a profitable trader, you just don't know it yet. You're just missing a few key principles to trading boom and crash that we're going to talk about today that are going to turn you into the consistently profitable trader that you want to be. If you don't know the key principles to trading boom and crash, you will never make money consistently in trading. And I remember there was a time where my phone was vibrating and I checked and it was a WhatsApp message from a VIP client and they had a problem. They were telling me, Davis, I'm making money, but I've got a problem. I can be able to build up my account, but I can't keep the money that I'm making. And this problem kept going on for them for a while. So they decided to reach out to me and they wanted to be able to make the money that they were making consistently, but also be able to keep it and stop losing it, because the process of making money then just losing it all was, they felt frustrated with that. And immediately they told me this, I identified the problem and I knew exactly what was wrong. They were able to make money, they could make money, but they were not able to keep it. So when it came to when they're taking the signals, when they're taking the trades, they were able to make money, but they were not keeping the money. So immediately they said it. I knew exactly what was going on here. And the thing for them was that there was a key principle that they didn't even understand and they didn't even know. So I remember getting on the phone with them and telling them and explaining to them to say, you already understand one of these principles. You're able to make money, which means you already understand one of these principles. The problem is that you've got a problem with one of these principles. And for them, the problem that they had was that they didn't have a specific target that they were aiming for. So I told them, do this. Since you're able to make money, look at all the days when you trade and you make money. So for example, let's say today you make $50, then the next day you make $30, then the other day you make $20. What I want you to do is, this is what I told them. I told them, look at the money that you make. Then I want you to look at what is the average that you usually make. Say you trade 5 days in a row, and out of those 5 days in a row, 3 days you make $25. So I tell them, take all those days and then look for the average. What's the average amount that you make in those 5 days? Then pick that average amount that you make in those 5 days. Make it the target that you're shooting for every single day. So what you should do is that once you reach that target, simply stop trading. Wait for the next day, hit that target, simply stop trading. And I tell them this is going to be difficult because you're going to be seeing other opportunities that you could take trades and make more money. But the thing is that once you reach a certain point, you always end up losing your money. So what you want to do is avoid reaching that point. Stop trading when you reach a certain point, which is your target, and then simply just trade the next day. So they made a decision. They said, okay, I'm going to try that. I'm going to implement the things that you've said and I'm going to see what's going to happen. So they started implementing that same strategy. And then after a couple of weeks, I just heard my phone ring and it was the same VIP client. And they were telling me how this transformed their trading. They finally could be able to keep the money that they were making. And I remember they were telling me, they said, you know, out of all this, I've realized something. I have realized that trading isn't just about having a good strategy or taking sniper signals. There's more to trading. And I laugh because that's the point that I'm always trying to get across. And I remember we had a good laugh about it. And this is important for you because if you're struggling right now in your trading, if you keep losing money, you might need just one of these principles. And that's the missing link that's going to make you the profitable trader that you want to be. So I'm going to share with you the 3 key principles to trading boom and crash. The first one is have a money making strategy. And this is the one you see everywhere. And this is the one most people talk about. Strategy, a good strategy. And yes, strategy is important. You need to have what I call a money making strategy. And how does a money making strategy look like? With a money making strategy, the first thing is you need to be able to analyze the market from a higher time frame, such as your daily, your 4 hours, and your 1 hour. And in those higher time frames, you want to be looking for what I call trading blocks. So what are trading blocks, you might be wondering to yourself. Trading blocks, you might know them as support and resistance, or areas of value. And in those areas of value, you need to know whether those areas are going to support your trades or they're going to block your trade. All right, so let me give you an example. If you want to catch spikes, let's say on Boom 500, but on a higher time frame, on your daily time frame, or your 4 hours time frame, or your 1 hour time frame, you want to catch spikes, but you see that on a higher time frame, the market is in a resistance area, and that's an area where the market would start going down, bounce back down from. That is a trading block. That's going to block your trade. But then if you want to catch spikes on Boom, and then the market is in a support area, the market being in a support area on a higher time frame is going to support your trade. All right, so the first thing is you need to look at a higher time frame and look at, is there anything that can block my trade? That's what I usually look out for. Is there anything that can block my trade? The second thing is you need to determine the trend. To determine the trend of the market, you simply need to go to your M30 or your M15 time frame and then look at what is the market direction. If you're not good at identifying market directions, you can use a moving average. You can use any of the good moving averages like moving average 50 or the moving average 200, and it will be able to show you where the market direction currently is. After you determine your trend, the next thing that you need is you need to get sniper entries. So how do you get sniper entries? By going into a lower time frame such as your M5 or your M1 time frame, and in that time frame you're able to get sniper entries. You can simply use an indicator, or if you've got a really good price action method, you can use that. You can now use those for entries after you've already done your analysis. And I'm not going to go too deep in strategies because I've got videos here on YouTube. You can go watch them about strategies. The second key principle to making money consistently with Boom and Crash is you need a bulletproof risk management. So you might be wondering to yourself, what is a bulletproof risk management and how does it look like? With the bulletproof risk management, you need to have a target for your losses and your profits. What does this mean? You need to have a target. Like, remember my VIP clients, they had a target problem. They could make money, they could do all these things, but they never had a target. And if you miss even just one of these things, it can lead you to losing money and not being able to make profits consistently. So you need to have a target to say, when it reaches this amount, when I make this amount of money, I'm done for the day. I close my chat, I'm done. I'll come back tomorrow. Even if it looks like there'll be other opportunities and this looks like it might go your way and that looks like it might go your way, you're done for the day. You have to remember the market is always going to be moving. With or without you, the market is going to be moving. You don't want to be caught up in the mess of it where you make money and then you just end up losing it, right? The longer you're in the market, the more the risk. So you simply want to make money and then you're out of the market. But remember I said it's a target for profits and losses, which means you also need to have a target to say, if I lose this much today, I'm done trading. It could be, if I lose 3 trades in a row, I'm done for the day. Because sometimes you could lose, it could just be a volatile day. It could just be your bad day in your trading, right? Your strategies are just not working. But if you continuously are taking position and you continuously lose, you can end up losing all the profits that you made the entire week or the entire month on one day, when you could simply just say, oh, my target has reached, I've lost 4 trades in a row, or I've lost X amount of money, and it's time for me to exit the markets. Instead of doing that, if you stay in the market, you could end up just losing all your money in just one day because of a simple mistake, because you didn't have a target loss. So you need a target profit and you need a target loss. The other thing about having a bulletproof risk management is you need to determine your TP and your stop loss levels. You need to know exactly when do you TP. You need to know exactly when do you stop loss. Now, this may sound simple, but if you don't have these things written down, you're gonna find that you're gonna be making a lot of mistakes. I get so many messages where people are saying, I actually wrote down my target, I wrote down my TP and stop loss level, and it's changed my trading. It can be as simple as just simply writing it down and determining to say, when the market reaches this price point, I am going to take my profits. when the market reaches this top level, I am going to exit the market, and then following that. Another thing about risk management is that you need to determine all these things you need to do before you start trading. You need to determine the lot size and the number of positions you're going to be entering per trade. For every trade, you need to write down to say, I'm going to be entering the market with this lot size, and this is the number of positions that I'm going to be going into. And then you follow that. You follow down what you have written down. Now, hope you're enjoying this video, but if you're struggling with risk management, then you need the Bulletproof Risk Management Guide. People pay up to $300 to get a package that has this risk management in it, but I'm going to send it to you for free because I know you need help. Simply click the link in the description below. That will take you to my WhatsApp. Once you're on my WhatsApp, just tell me I need the risk management PDF and I'll send it to you for free. The third key principle to trading boom and crash and making money consistently is you need to have what I call a profitable trading mindset. So how does a profitable trading mindset look like? First important thing about having a profitable trading mindset is that you need to be able to handle losses and move on from them. Because if you're doing revenge trading, you're basically saying, I'm ready to give my money away. Because if you can't move on from losses, you're simply saying, hey market, here's my money. Let me give it away to you. Because once you're in the markets and you're trading with those emotions, I need to get back the money that I lost. I need to get back what's mine. You're finished. You're only going to give the market more money. You're only going to lose more of your hard-earned money because of that. So you need to be able to know how to process and move on from losses. And how do you do this? It's simply by understanding that, hey, I made a mistake. Let me look at what mistake did I make in order for me to lose this money. That's the mistake I made. Maybe I held positions for too long, right? Maybe I was greedy when I was supposed to TP, I didn't TP. Maybe I didn't have a target. Maybe my strategy isn't good. So you identify the problem, then you fix that particular problem before you decide to trade again. Once you fix that problem, then you go back into the markets because you now understand and you can now handle that. And that's how you handle losses, simply by learning from them and then fixing that, because losses help us to identify where we're making mistakes. Another thing about having a profitable trading mindset is that you need to be able to overcome greed and fear. I understand you could be fearful. Maybe you got burnt. Maybe you've lost a lot of money and you have this fear of trading, or you get greedy in the markets when you're trading. You want more, You're like, oh, maybe it's going to go deeper into profits. If you're struggling with that, there is a simple solution. And if you're enjoying this right now, make sure to leave a like and a comment below about what you've learned from this so far. But if you struggle with fear and greed, you simply need to understand one simple thing, and this is it. If you follow your trading plan, you're going to make money. If you don't follow your trading plan, you're going to lose money. And you just need to remind yourself of that simple thing. To say, if I TP when I'm supposed to TP, I'm going to make money. If I stop loss where I'm supposed to stop loss, I'm going to protect my account. If I do anything other than these two, I am more likely to lose money. And the thing is it's about stacking the odds in your favor. So you're more likely to make money when you do follow your plan. Another really important thing about having a profitable trading mindset is that you need to set realistic goals and expectations. This simply means that it's simply not trying to make $20,000 from a $20 account. It's simply not trying to make $1,000 from a $10 account. Now, can you grow $10 into $1,000? Yes, but you have to be realistic about it. You have to be realistic about how long it's going to take, right? Because it's going to take time. If you're trying to do it very quickly, you're basically telling the market, here's my money. Hey, do you want some free money? Here it is. That's simply what you're doing. So you simply have to be realistic about it. You could be realistic, and this isn't like those fancy themes where people are like, $10 to $1,000, I understand. But it's being realistic to be like, it might take me 5 years to grow $10 into $1,000, right? It could be a little project that you're doing by the side for yourself, that you're doing that. But you have to be realistic about the goals and expectations, because if you're not realistic, the problem is that you're going to be trying to make things happen that cannot happen. because you saw some guru on the internet do it, and you think that that's how trading works, when really it's not. And if that's how trading worked, everyone would be a millionaire, right? So it's simply about setting realistic expectations to be like, I can do this, but it's probably going to take me a longer time, and I need more skill, discipline to be able to do it. And I'm telling you, this might sound like, but it's what's going to make you money. It's actually what's going to make you consistent profits. Now, can you grow a small account to a big account fast? Yes, definitely 100% you can, if you've got the right skills to do it. And if you want to know how my VIP client grew a $10 account to $64 in one day, click the video that's appearing here, and I will see you there.